Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, July 10th, 2024. And we're getting on to right now, where are we? Just shy of 6 p.m. Central Time. Well, today was day two, and it's over now. This is the semi-annual testimony that Fed Chair Powell had to give first to the Senate in this event and then to the House of Representative committees. No new fireworks to talk about today. Everything repeated yesterday. He again said he's not going to tip his hand as to what the Fed's going to do next. Frankly, he doesn't have a hand to dip. He's still looking at the data like everybody else is. That's the very first thing. Tomorrow's the big day with the CPI numbers, all right? So you've got to be ready for that. And then the 1-2 punch is the PPI number for the futures traders on Friday. And for the SPDR ETF people, it'll be Friday with the first bank earnings report. So believe it or not, we're right back into the earnings season, which always seems to be going on. I hate the fact that some of these get dragged out as long as they do. They think the time frame should be closer and get them done within weeks, not many weeks of each other. But when we look at the numbers, tonight I'm going to give you some ideas. Here's what the market is looking for going into the report. The forecast for the June CPI is on a month-over-month basis up 1/10. When you look at it in an annualized basis, they're looking at it 3.1%. Core CPI is expected up 0.3 in June compared to May's 0.2 of a gain, and year over year, it's looking for 3.4%. So the market is building in basically 0.1 of a point gain. Anything under that is probably quite bullish the market. But anything over it will be, initially at least, a holdback. It won't matter. Here's why. Because the naysayers will say, well, if it didn't happen now, it's going to happen next month. And the Fed's going to go regardless. And they have been right in saying this all the way through. I can tell you, analysts, including me at points, didn't think they were right. That's not true. The chart action took over, and those people were right. They will get hung at the top of the market because they'll do what they're used to doing and winning, and that is they will push their hand too far. It inevitably happens. The question is, when do you pull your bet back? That's how it'll be. And it should work that way because nobody knows where the top is. We then get jobless claims coming out tomorrow, and they're looking for that down 2,000 to 236. We're looking for a 55 billion cubic foot build in the natural gas. And now the Department of Energy came out and they said, all right, we're ready to buy another 4.5 million barrels for the strategic reserve. Now, I do a whole write-up on this tonight in my full research. I show you how much they bought back over time now, how much they sold in 2022, where they're at. Their bid is about $3 under the market. It's not a terrible bid because oil can move that much. The problem is they're giving it a week to do so because that's when the bid ends. I don't know if that's enough time. We'll find out. Then we had OPEC come out, British Petroleum, IEA, and now we're going to get the DOE forecasts for 2025. British Petroleum absolutely is at odds with OPEC as to when they think the top of the oil market is coming. We're seeing a lot of uranium usage pick up in different markets. I'm starting to cover one of the companies now as a regular in my nightly review, so I think you'll like that. And then we'll start covering it on the mornings in a little more detail because uranium is going to play a key part. Even Australia, the last holdout, is now, if they have an election coming up in May, if the people that are running can win, their goal is to overturn some laws and get uranium onto the board, if you will. It's a good sustainable energy if you can control it. You know that, I know that. Japan knows it all too well, and that's the problem. You see in earthquake-prone areas problems. So when we look at the stock market, while you see it down, you went up to new all-time highs today in the S&P. So what was this, 36 times this year we've set record highs. I think this was the 6th or 7th day in a row of new highs in the cash index. You even pulled along today the Russell and the Dow with it, but that's to be expected. I wrote to my subscribers this morning, and I explained that I thought traders were positioning themselves bullish in the stock indices for tomorrow. I thought they were doing this early morning, not late in the day when it rallied even further. I told them that I thought they were buying the metals. In other words, traders were buying gold, copper, silver. And they were buying the bond market. I didn't see a lot of play out of the foreign currency market in there. All right. When we take a look at the S&P, again, if you finish like this is a weekly chart, not a continuation day after day, it would be an all-time high. When we take a look, though, at the daily bar chart, you can see you've now lifted out and you got a lot more volume. So I think I was right in the analysis. Traders waited for the day before the CPI, and instead of watching paint dry, they came alive today and they put their money up there. Now, they bought a spike in the market so far. I don't know that it'll be a spike. You know, if after the CPI, it could be up here. Or you can come back down and challenge the 5,500 level. It's going to do something, and probably interesting as can be tomorrow. You've had what we call a vertical price rise. That is each and every day. For how many days here? 1, 2, 3, 4, 5, 6 business days in a row. The market has ended up making a higher high than the prior day and not taking out the prior day's low. That's a vertical price rise. The market is over the 18-day average, which is over the 100, which is over the 200. That's a bullish scenario. So where do you think the resistance is? It should be the upper Bollinger Band. And you've got what we call the Gorilla Glue trade. I've talked about that with you here each evening, and I do it with my other traders in my subscriber videos, where you latch on, and what you then do is force the market to be embedded, which you have. So until the red line closes under 79, hard breaks in the market are probably going to be buys. Now, do you get hard breaks when you get that pattern? You typically don't. You get breaks, but they're not hard. So I don't know that you can get back right away to the 55.72 area, the 18-day average, unless you have a real surprise and CPI is a lot hotter than anybody thinks. The same holds true with the same pattern in the NASDAQ, and I pointed this out to you yesterday the same way. I know I'm repetitive, but that's what the market patterns are. It's the same identical pattern. You're trying the upside in the Dow. Notice where it stopped. So we give the Bollinger Band credit. It does its job most of the time, 95% of the time. Now, eventually, you've got to come out of this. I did an explanation of this yesterday. Think of this as a pipe and a spring, and it winds. One way or the other, it's going to break out of there. This market will not stay in that narrow band forever. It's going to break out of it, and it won't stay in it in futures that long at all right? So I'm looking which way. So today, the market came up, challenge. Let's go back to today. And as you can see, you closed the market at 40,049. Let's applaud that, number one. It's still a great close. It is over the upper Bollinger Band, and it's the top part. To get a breakout on my work, I need another day where you take out today's high. Let me come to that for you right here. Where you take out today's high. And when you take out today's high, what happens is you've got to close again in the top part of the range outside of the band. Then, as far as I'm concerned, the market is broken out of this and it's ready to move even higher, and you probably force this market to embed. But what we've been seeing and understand is in this market, you get a day or so up to the band and you fail. We'll see what tomorrow does. I can say the same thing is very true in the micro, but it didn't even try to settle over that band in the top place. Be careful. It's also got the 100-day average resistance right here. That remains the weakest of the indices. In the note market, the 10-year note has stayed over the 18-day average. It is overbought. The trend is up. In order for this market to hang in there, it cannot afford for CPI's core and headline to come in hotter than what's being forecast there. So pay attention to that. And then you got the dual mandate, if you will, where you got to look at the PPI the morning after. Same thing in the 5-year note, but the trends are up in both at this time. In the dollar index, you're in a bear trend. You hit the objective. You didn't embed. I think the pros got out of their positions in front of tomorrow's report, and it puts them in a great position to decide what they want to do next. They probably are doing the flip-flop of that, and they did it back here 2 days ago when you got to the 100-day average and the Bollinger Band top, and you haven't gone anywhere since then. That does not mean the market has to stop here, but it is overbought, and you're going to need new information, and you're getting it to figure out what's next. In the British pound, a lot of talk that the market is not going to see a rate cut in August. The odds fell. They were getting up into the high 60s that you would, and suddenly they're back into the 50% area. The longer, I should say, they don't cut, probably the stronger this gets. I think the market's concerned about wages, service inflation still, and a new government in place. And they've got to get their feet under them. The banks probably needs another month besides August before they do anything. When we look at Bitcoin, still bearish, and I haven't heard anything, maybe you have, to the SEC approving these other ETFs that are going to come out. And you can see the market's still under a bearish pattern. When we come to the energies, you peaked out again against the upper Bollinger Band. You may not be a believer like I am in these bands, but they're very important to learn to work with. Go to our website under the courses, iraepstein.com courses, and the course on Bollinger Bands is there. Higher high, lower low, and back to the neutral area, my line in the sand. The 18-day average is at a weight. More reports on oil, the demand for oil, where we're at. Same thing happened here in WTI. I mean, it's crystal clear what it did. In gasoline, same thing. And you fell back, and I said, you'll probably try to find support. And I said this yesterday on the first run to the, and I'll take you there just so we can talk about it. I said, you often then, if you're this much, often the markets try to challenge that since momentum's turned down, the 100 and the 18-day average to see what the market's made out of, and you can see what it's doing right there. Now, if it wants to get bearish numbers from here or bearish sentiment, you could fall back to the 200-day average in the lower Bollinger Band. But typically, that's about where the market falls back to restructure itself. Natural gas, I remain bearish on. I told you that instead of futures yesterday, I told clients to sell UNG, the spider ETF, short. And we're getting the plays that I wanted with an embedded reading, so I'm pretty happy with that at this point. You're never happy until you come out of the market and you got money in your hand. Remember, we have a lot of free offers here. My trial to my spider ETF, trial to these, my subscriber futures markets ETFs. All these are on our website under free offers. You choose what you want. We get everything for you if you haven't tried these before. And I think you'll find it well worth your time and effort to take a look. When you're through choosing, if you just go to the bottom of the page that's there, it'll ask you for your name, your email address, any comments you have for us. Just put them all in. It takes us about a day and a half, and we get everything to you. So you'll see that bottom like you just saw there. iraepstein.com, free offers, or move your cursor to the top up here. Give it a click. It'll take you right in that area. I'm Ira. I'll talk to you tomorrow right after the CPI comes out. Probably I'll try to get these out a little earlier. Sometimes it's difficult because I'm writing a report for my clients, but I will be out right after the 8 p.m. at the latest. Take care in that central time. Take care now.